Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Markets doing well, but Nifty's off the highs of the day. The Midcap's still in the green, but we have to talk about a lot of stocks, so let's get started.
Absolutely right. Quite a lot of stocks on the radar. Quite a lot of stocks seeing quite a bit of volume-backed action as well. But first, let's start the show with headlines. Stocks open firm, but stay ranged amidst global uncertainties. Realty and FMCG are the big gainers, even as Pharma and Healthcare drag. Midcaps outperform.
Tejas Networks climbs after posting stellar sales growth in Q4. Revenue up 137% sequentially and 343% on a YOY basis. Profits seen after 5 quarters of losses.
Hatson Agro jumps on a dip in milk prices in Q4. Profit after tax doubles on margin expansion. Management tells CNBC-TV18 that they are targeting 15 to 20% growth in sales in the next 2 years with improved margin trajectory.
Sudarshan Chemical up over 9% after its Germany competitor in the pigment sector, UPAC GmbH, files for insolvency. Move expected to create a void and strengthen company's market presence across this export market.
A 7-time subscription of the Vono Idea follow-on public offer lifts expectations of a revival in its fortunes and of key creditors like Industars. Analysts see a tariff hike benefiting all telecom companies around the bend.
Okay, all right. These are the top headlines. But for the Nifty, it's a 55-point uptick that we've been seeing. The mid-caps are the ones which are firing away again, 500 points higher. And as I was pointing out earlier, we've come off from the highs of the day, around 60 points from the highs. The Bank Nifty too is flat with some positive bias, calling it flat because we are seeing larger moves on the other indices. It has spiked a little in the last couple of trading minutes, but other than that, the small cap index too has gained some momentum. That one is up around 0.8%. Most of the sectoral indices are in the green, barring Nifty Metal, and earnings, they continue to coming in how?
Earnings continue to come in. They're coming in thick and fast, and we are still, towards the start of the earnings season. So there's a lot more lined up, and there's going to be a lot of work for all of us. But let's now move to our special segment, Midcap Movers. We have Hormas to take us through the midcaps that are moving around in the session. Hormas, quite a few names today.
Quite a few names, and it's just a normal day, right? When the benchmarks are not doing much and the broader markets are firing away. Just a normal day, just as any other day in the office. We start off with the Midcap Gainers as we speak. The start with the stocks like ITI, that will come up on your list as well. There you can see 9% higher for ITI. BSE is up another 8.5%. Macrotech with 4.5% coming out with numbers tomorrow. And Amara Raja Batteries, there's not a single day when the battery makers don't feature in the list of gainers. Amara Raja there, another 8% higher. But one specific group stocks that are doing very well today, and those are the Aditya Birla group stocks. And Vodafone, led predominantly by Vodafone Idea, 11% higher now. There at one point they were up 14%. Vodafone Idea shares after the FPO. Aditya Birla Fashion as well, some strong commentary in the con call, 8.5% higher. Aditya Birla Capital and Aditya Birla Money also seeing gains of anywhere around 5% each. Defense stocks, and among them shipbuilders in particular, are doing very well in today's session. Cochin Shipyard is now up 80% in 2024 in the first 4 months itself. Mazgaon Dock is up 3.5%, and Garden Reach Shipbuilders as well is up another 9% in today's trading session. Some earnings reactions will come up on your screen, and they are on the extreme side as well. And Tejas Networks is locked in a 20% upper circuit after the profit that it reported this quarter. Hatson Agro as well up 11%. But Rallis India, although the losses narrowed, the stock is still down 5% in today's trading session. Some volume-led buzzers that will come up on your screen now, and those stocks are leading the pack with Tata Tele 11% higher there. Honasa Consumers, second day of gains there, 9.5%. Sterling and Wilson and Wellspun Living also contributing to some volume-led gainers. And lastly, the underperformers that will come up on your screen, and those include the likes of M&M Financial. The new board meeting announced for the 30th of May now when it comes to their earnings announcement. Spark, yet another day of lower circuit, more shares outstanding for sell orders at these levels, so more downside likely there. And Nippon India and Latent View completes the list of losers in today's session. Back to you.
Okay, all right. Thank you so much, Hormas, for joining us. So those are some mid-cap movers. By the way, a lot of these stocks are continuing their winning streak. We were speaking about Vodafone Idea. That's been the case through the course of the day. Himadri Specialty Chemicals, that should come up for you on the screen because that stock is up around 8% this week itself, and that continues to move higher. In fact, in a weak market as well, we were seeing big gains coming in there, and 5% higher on that one right now. India Bulls Real Estate is the other one. That too, after that fundraise, did see some profit booking, but post that, it has seen a one-way move, and today as well, it is one of the gainers. Of course, not okay, that's a big gain. 7% higher on India Bulls Real Estate as we speak. We'll do one thing. We'll slip into a short break now. When we come back, we'll be joined by the management of Epigral to discuss their Q4 numbers. Stay tuned for that. Welcome back. You're still tuned in to Midcap Radar on CNBC-TV18. It's time to focus on Epigral. The company has reported a mixed set of fourth-quarter numbers. The revenue has declined while the margin has expanded to 30% in Q4. We have Maulik Patel, the chairman and managing director of the company, joining us now to take a few questions on the numbers and, most importantly, the business outlook. Maulik, good afternoon. Thank you so much for joining us. Well, in the previous conversation that we had, you had indicated that the volume growth could be around 18 to 20%. It's coming at 15% for FY24. Can you give us a sense of why it's slightly lower than that mark, and what's the volume growth outlook in FY25 considering there's a lot of capacity coming on stream?
Yeah, so you are right. Our expectation, because we have commissioned a lot of projects in last 1.5 years, but because of the subdued market in the export region, export specifically, our volume has little reduced, but still we have increased 15% volume growth in this current in the last financial year. And current financial year also, we are expecting 15% volume growth as we are expecting, and we are commissioning new projects, our capacity expansion of CPVC, our CPVC compounding capacity, and also chlorotoluene, which is an import substitute molecule, we are also commissioning in the first half of the current financial year.
Mr. Patel, now when we're talking about the quarter gone by, volumes went higher, but revenue actually dipped. So on a sequential basis, on a year-on-year basis, give us a sense of how realization trends panned out, number one. Number two, going into FY25 and Q1 especially, have prices bottomed out? Can we see an uptick from here on?
Yeah, if you see if you talk about the general chemical market, so domestic market has already picked up in India, but export market is still subdued. So because the volume growth, our major business is coming from the domestic market. So that's why we are able to achieve the 15% volume growth, what we have achieved. And going forward also, the focus is also on the domestic market, and that volume will continue to grow at 15%, even next financial year also.
Okay, so domestic market will grow at 15%. Exports continue to be subdued. Have you seen any recovery in realizations? You have indicated that there was a dip in realizations anywhere to the tune of 12 to 45%. This is something that we've been seeing in the industry as well. But is there still higher dumping coming in from China? And do you think that is something which could continue in FY25 as well?
Yes, China is dumping all over the world. That is keep continuing, but still our products are import substitute molecule, and people wanted to having a second source other than China globally. So that strategy is played very well, and I think we are getting little higher margin and little higher support from the domestic vendors as well as from the export vendors for that. And that's why we are getting a support as a China +1 strategy.
Wanted to understand is, does that mean there has been a recovery in pricing in the domestic market as well? You spoke about volumes and demand getting better. Is it coming at higher prices?
Right. So, last year it was a very high pressure because the demand was also not supporting. But, on quarter, Q3 onwards, Q4, it was compared to Q3, Q4 was better. And now in the Q1 we are getting more support in terms of the realization also. So we are saying realization is not going to be major change, but the volume support and the demand support is started coming from the domestic market.
Okay, so Q1, you're saying that realizations compared to Q4 could be flat, but you're saying top line can be aided with volume growth. Now let us come to FY25. please correct us with these numbers and please give us some qualitative sense. Number one, are you expecting FY25 volume growth in the range of 15%? And this is on a base of an expanded capacity that you currently have. And number two, will you be able to maintain EBITDA margins in the range of 25%?
Yeah, that's what we have mentioned, yeah. So 15% volume growth we are expecting majorly is coming from the CPVC and the epichlorohydrin, which is import substitute, and the domestic demand is increasing in terms of the downstream application is also increasing in India. So we are expecting 15% volume growth in current financial year also in FY25. And we are expecting our EBITDA margin will remain around 25%, which we have mentioned.
Okay, 25% will be the margins in that is similar to FY24 levels itself. Volumes will also grow at a rate similar to the FY23 levels. Can you give us a sense of the new projects that are getting commissioned? The CPVC resin, which you commissioned in April, there's CPVC compound as well. What will the total capacity look like by the end of FY25? And what will the initial capacity utilization be? Because right now you were at 83% utilization. Will your average utilization come down in FY25 in that case?
So average utilization, definitely it will come down, but we have increased our capacity from 30,000 ton to 1.5 times, which is 75,000 ton. So to new capacity, which we have commissioned in last month, in beginning of this month, which will take time to absorb, probably will start getting the revenue mostly from the second quarter onwards, and probably will reach to optimum capacity by end of, I think, beginning of quarter 4.
Okay, so the volume growth of 15% has taken into account the expanded capacity and the new capacity coming onto the stream. One more question, while you confirm that particular statement as well. As far as domestic market and export market is concerned, give us the revenue split, and in FY25 onwards, how do you expect exports to actually surge higher?
So, as a epigram, our focus is more on the import substitute molecule and the derivatives side, and major revenue is coming. I think in last year, if you consider, our 96% revenue coming from the domestic business and 4% only from the export business. So that's why we are able to achieve the 15% volume growth, because there is no domestic support is very high compared to the export support, export customers. But in this year, we are expecting around 8 to 10% our revenue will come from the export in the coming financial year, and 90% will be from the domestic business.
Okay, all right. So that's what you have figured out in terms of volumes and export breakup as well. You had a target of 5,000 crore of revenues, that is by FY27. You have done revenues of around 2,000 crore rupees in FY24. That means you'll have to grow at a CAGR of 35% in next 3 years to ensure that you reach that mark. Considering the global volatility, do you stick to that mark? And how are you ensuring that you reach that guidance that you had given?
So definitely, yeah, we have given a 5,000 crore benchmark based on the 2022 prices kind of thing. But yeah, we are doing a capex continuously on the import substitute molecule, and 350 to 400 crore capex we are doing on a year-on-year basis, and definitely the volume growth will achieve. And probably, based on today's revenue and realizations, I think you can consider 5,000 mark will be around 4,500 kind of thing. But definitely the volume growth will achieve, and we are the realization is also going to be improved going forward, and I think we are going to target our what we have given a target of 5,000 crore by FY27.
Okay, so you are saying, considering the realizations, it could be at around 4,500 crore rupees, because that was made basis FY22 numbers. But of course, how things go ahead, there could be a 5,000 crore rupee number as well. What happens to debt with all the capacity expansion that is coming by?
Yeah, so debt currently what we have is, including working capital, we are having a 960 CR, which is 200 crore debt, and remaining is long-term debt. We understand that current debt is at a peak level, and going forward we will reduce the debt also along with the capital, our expansion growth, our growth planning also. So I think current level of debt is around peak level. That's what we understood based on the numbers which we have forecasted for the FY25. And going forward, I think the debt will come. I think this come down, and so absolute number, I think it will not come down because of our growth plan. But in terms of the ratios, definitely it will come down.
Okay, so expecting ratios to improve. Just to come back to the domestic market and the export market question, you said that this year it was 96% and 4%. You're saying that in FY25, exports are expecting to go to the range of 8 to 10% of your total top line. You mentioned at the start of the interview that at this point of time, things are still subdued as far as the overseas market is concerned. So are you expecting growth in the exports market mainly to be back-ended? And what is giving you the confidence to go ahead and actually double your top line when it comes to only the exports portion of the business?
So export, definitely the market is not growing in terms of if you consider specifically about the Europe and the US. But looking at the industry situation in Europe, there is an opportunity from the current industries which is not doing good, so that we can have a chance to enter, and all our products are getting approved. I think epichlorohydrin, which we have commissioned, there is a huge scope in the European market as well as in the US market. And last 1 year, we have taken almost all customers' approval, and probably we see the volume will start rolling probably from this year onwards. That's why we are expecting our export volume will grow in current financial year.
Okay, all right. Thank you so much, Maulik, for joining us and giving us those numbers and details as well. So that's the word coming in from Epigral. There's an improvement in domestic demand, but realizations continue to be under pressure. They're expecting 15% volume growth in FY25. However, the FY27 target of 5,000 crore of revenues, that could not be achieved because of the current pricing scenario. We'll slip into a short break. When we come back, we'll speak to you more on the markets and stock-specific actions, so stay tuned for that.
Welcome back to Midcap Radar. The markets continue to stay in positive territory. Both the Nifty Midcap as well as the Nifty Small Cap Index, both are trading with gains of over 1%. The stock in focus today is Rallis India. The stock has seen a sell-off as both revenue and margins have disappointed in Q4. Sonal, you've been tracking this quite closely. Tell us more.
Well, it is always the case for Rallis. They do not do well. There is something or the other that happens, but Q3 was strong for them. And there was an expectation maybe that could continue in Q4, but that is not the case. Revenues are down 16.5% for the company. There's an EBITDA. Yes, there's an improvement there of 6 crores versus a loss of 65 crore rupees, but the company has still made loss at the bottom line of 21 crore rupees versus a loss of 69 crore rupees. Even on a quarter-on-quarter basis, there's no improvement. Revenues are down 27%, EBITDA is down 90%. Company says earnings were impacted by pricing pressure, which impacted their margins and which impacted their profitability as well. EBITDA was also impacted by 83 crore for provision of slow-moving inventory and impairment of intangibles in seeds business. Additionally, if we talk about the split between the two segments, the crop care revenues, they continue to decline. They have declined 18% on a YY basis. Their seeds revenue is flat. So the problem here continues to be the crop care business, and destocking continues according to management's commentary on the conference call as well. They say global recovery will take more time than what they had anticipated earlier, and inventory destocking that continues. So that says a lot about the entire agrochemical space, that there's still problem with the crop care industry, and there is an indication that yes, they will take some time to recover as well. However, they are seeing signs of improvement in the seeds business and they expect growth to come back. But I think the crop care business is something which could be a dampener for the entire agrochemical space.
Well, thank you so much for that. And like you mentioned, the company has been seeing consistent disappointment over the last couple of quarters. No wonder the stock hasn't been doing quite well. But let's now shift focus to Hatsun Agro Products. The stock is up over 11% after the company continued its good performance in Q4. Reduction in milk prices have aided EBITDA. PAT doubled on margin expansion. Earlier today, we spoke to the chairman of Hatsun Agro Products, R.G. Chandramohan. Listen to experts from that particular conversation.
Normally, January, February, March is our lean month, where procurement will be going down and the sales will not pick up because summer has not come. This time also the same thing, but summer is expected to be very hot. But we are prepared for the summer. We have already done a good procurement of more than 20%, and we are sitting with enough stock to manage the supplies in the summer without any difficulty. And 25-26, we can think of anywhere between 15 to 20% growth. 1.5% we can increase from the present 11.2. Tamil Nadu today accounts for 52%. By end of the year, that is beginning of the next year, I expect it to be 48% because the growth, most of the growth is happening in the new markets. Probably if you leave non-south, it may be about 9% because mostly it is ice cream and not dairy products, except Maharashtra.
Vodafone Idea and Indus Towers are on our radar. Vodafone Idea's FPO saw strong response, while CLSA has upgraded Indus Towers to a buy rating. Rima focuses on both those stocks.
Thanks so much for that. So let me start with Vodafone Idea. They've just concluded successfully their massive 18,000 crore FPO. And there was a lot of skepticism going into this event too, whether the retail shareholders will participate, whether they have the confidence about this FPO sailing through. Which is why, while there was this news around the fundraising, and you knew that if the fundraising is successful, it's a big positive for Vodafone Idea, the stock didn't really perform. Year to date, Vodafone Idea share price is down close to about 12, 13, 15% at a time when Bharti Airtel and Indus Towers got re-rated. So there was that big underperformance versus its peers, which could perhaps, there is a scope for a little bit of catch up. As I said, their massive 18,000 crore FPO also was very successful. Overall subscription of 7 times, retail fully subscribed, QIBs 19 times, HNI 4.5 times. A successful FPO is important for Vodafone Idea for 3 reasons. 1, it paves the way for raising 25,000 crore rupees from banks. 2, it provides growth capital for 4G and 5G, which can improve the company's competitiveness, which may, over a period of time, help in arresting their subscriber market share loss and participate in the growth story. On Indus Towers, CLSA has once again, and they recently upgraded it, but they've upgraded it again and now to a buy from an overweight. Target price has now been raised to 450. They say that Indus Towers is the big beneficiary of Vodafone Idea's fundraise, and although the stock is up 150% in the last 12 months, it's still trading at a discount of 60% to peers, and at the fair value, which CLSA sees at 450, it would still be at a 45% discount. So relative to global peers, there is still a lot of value left in Indus Towers, according to CLSA.
Thank you so much, Rima, for joining us with those details. Well, from Vodafone Idea, let's talk about the other Birla Group company. Aditya Birla Fashion is firing up in trade today. There was a conference call with respect to demerger of Madura from the company. Vamakshi is joining us with the details of the conference call. 10% higher on the stock, Vamakshi.
Well, absolutely flying high in trade today is ABFRL, and some important takeaways from the con call are as follows. The rationale behind the demerger the company mentioned was to enable both the verticals, that is ABFRL, ex-Madura and the Madura business, to pursue opportunities and drive growth on their own respective paths. The demerger is expected to be completed over the next 9 to 12 months, and in fact this will be done only after the TCNS merger with the business happens, which is expected in the next 120 days. They have highlighted that the company is now in a consolidation phase, and that is because they do not see any meaningful acquisitions come up, at least in the near term. As far as the ABFRL business is concerned, the brands within this entity will be needing more capital investment to drive growth. The fundraise that they've announced of almost 2,500 crores for ABFRL will be used towards driving growth for investments in brands, as well as paying off some portion of the debt. The capital structure of the company, however, is yet to be determined, is what the management highlighted. Majority of the investments that will come through from the fundraise will be made in the ethnics portfolio initially, which currently has an annualized revenue potential of around 2,000 crores, and this can actually be increased, rather more than double, to almost 4,000 to 5,000 crores. Tomorrow is expected to have its own funding path separate from the planned fundraise of 2,500 crores. The company had earlier mentioned that they will be taking on 2,000 crores as debt on ABFRL, and nearly 75% of this is expected to be long term, while the balance is expected to be working capital requirements. Now, as far as Madura business is concerned, Madura business debt levels are expected to fall sharply in the coming years despite investments towards growth. Large runway of growth is what they see, especially in the sportswear and innerwear segment, and they believe that the brands can generate positive cash flows which can be invested to strengthen the core brands going ahead. So overall, positive commentary coming in from the management, and as a result, the stock is soaring in trade today.
Thank you so much for that, Vamakshi. Markets clearly taking very positive cues from that particular conference call. In fact, if you take a look at all of the Aditya Birla stocks today, have a look at Vodafone Idea, of course, a very successful FPO conclusion over there. Aditya Birla Fashion that Vamakshi just spoke about for us. Aditya Birla Capital, that particular stock is up almost 8% today. Aditya Birla Money, company declared its results yesterday, and even Aditya Birla AMC. So all of the Aditya Birla Group stocks today doing quite well in the session. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.